So if you're adding all of it up, all the tax strategies we talked about, we're up to $25,000 in actual tax savings. I want to give you another reminder that this is not $25,000 in tax deductions, right? This is way more than that. This is $25,000 in actual taxes that you're not going to have to pay to Uncle Sam. In this video, I'm going to give you 5 tax strategies that you need to put in place with your business prior to year end. So that's prior to December 31st. And for some reason you're watching this after December 31st, you need to still watch because you need to put these in place for yourself for next year. And as a bonus, I'm going to include 2 strategies that you can actually put into place after the year is over. All right, so let's jump right into it. So the first one relates to self-employment tax savings. So that's Social Security and Medicare taxes. So you may not know what this is. Basically what I'm saying here is if you have an LLC or a traditional corporation and you've made a good amount of profit in your business, greater than $40,000, in my opinion, is when you want to implement this, you need to do an S Corp election and set up your payroll prior to the end of the year, prior to December 31st, because there's some deadlines right around the corner for you if you start to approach the following year, right? So you want to make sure that you pay yourself a reasonable amount of compensation and you have your W-2 prepared with the proper notations for health insurance premiums and any 401k contributions that you may be making. And don't worry if you don't understand some of that, I'll explain it here in just a second. So I'll link a video where you can learn more, but basically if you've got a business with $100,000 in profit, right? You can have it taxed as an S corporation instead of a sole proprietorship. So that alone can save you over $8,000 in Social Security and Medicare taxes. So again, if you're watching on YouTube, I'll link the video. If you're watching on another social media platform, I'll do my best to link a video down in the description or in my profile for that matter, all right? You know what, as a matter of fact, let's keep a tally of the amount of tax savings you can have by implementing these strategies, right? So I gave you an example a moment ago where we got $8,000 worth of savings between Social Security and Medicare taxes. So the next one would be health insurance premium. So if you're an S corporation, if you're being taxed as an S corp, and you're doing things properly related to your health insurance premiums, meaning your business is paying for them, or you're reimbursing them in something called an accountable plan. So in short, your bookkeeping is getting done right, your payroll is being done right, and your health insurance premiums are sort of baked into your W-2, then you can save 15.3% on your health insurance premium. So if you're paying $10,000 a year in health insurance premiums, you do the math times 15.3%, that's another, roughly $1,500 that you could be saving in Social Security and Medicare taxes, right? So we have $8,000 for implementing the S Corp strategy, right? And $1,530 for the health insurance premium. So that's $9,500. I'm just going to round a little bit there, right? So if you're watching this and you're just now learning about the S corporation and you don't have an LLC or corporation to make an S Corp election with, then just be sure to not make that mistake again in the year following this one, right? So in this example, I'm shooting this in 2021. In the year 2022, don't make that same mistake and make sure you form an LLC or a C corporation at the beginning of the year, January 1st, 2022, so that your full year 2022 income can be taxed as an S corporation and you can take advantage of the Social Security and Medicare tax savings that I just mentioned above. All right, number 2, retirement. So if you're thinking of setting up a solo 401k plan and you haven't done it yet, you've got a few more business days to do so, right? If you wait much longer, it's going to be too late, and the company that sets up the plan may not have enough time to do so before the deadline. So a solo 401k allows you to put even more money into your retirement than an IRA or a Sep Ira for that matter. So you can do up to $58,000 in the year 2021. So let's, not everyone has that much profit to put into their 401k. So let's say you want to put $20,000 in. And again, continuing with our example, let's say you're in a 25% tax bracket. That could be 20% at the Fed level and maybe 5% at the state level, okay? So you got the $20,000 that you put into your 401k times 25%. That's another $5,000 in tax savings. So if you're, tallying this up with me, we've got $8,000 for the S Corp, $1,500 for health insurance premiums related to your S corporation, and $5,000 for a 401k. So far, we're at $14,500 in tax savings. All right, the third one is the auto deduction. All right, so I don't want you to take this if you don't need a vehicle. Take this deduction if you need a vehicle now, or perhaps within the next year or so, you feel like you're going to need a new vehicle, and you made a bunch of money in profit this year, and you think that you're not going to make that same amount next year. For, let's say you're a realtor and the real estate market really blew up this year, and so you think next year things will tame down or calm down and you're not going to have as much profit next year. That means that you're in a higher tax bracket this year than you will be in next year. So this might be the year to purchase that vehicle, right? And I would say, you know, this is not a black and white rule, but I would say if you're using that vehicle greater than 80% for business versus personal, then that's when you want to consider it, right? So I'm talking buying a vehicle that you need, not that you want, and doing it before year end, and you use it 80% or more for business, and you're in a high tax bracket this year versus next year, then go ahead and purchase that vehicle by the end of this year. So you got to take, you know, possession of that vehicle by December 31st, right? So you may be able to write off that entire vehicle purchase in the current year, even though you're going to get value from that vehicle in future years, right? So let's pretend you bought a, let's use a conservative number, a vehicle for $30,000, or maybe it's, you know, somewhere close to $40,000, but it's got 80% business use. So, you know, I'm just making these numbers up. $30,000 times the tax bracket that you're in. Remember, we said 25%. And so that's $7,500 in tax savings you could be getting in this year, right? So again, if you're keeping track, you got $8,000 for the S Corp, $1,500 for the health insurance premiums, $5,000 for the other strategy, $7,500 for the car. Now we're at $22,000 in tax savings. This is not deductions, right? These are not $22,000 in deductions. This is $22,000 that you don't have to pay Uncle Sam when you file your tax return. All right, number 4, hiring your minor children and paying them. You need to do that prior to December 31st. You can't go into the next year and pay them in the following year and take the deduction in the current year, right? So depending on the amount of work that they do, and what they're doing for you and their age and all that stuff, you could hire your minor children, pay them up to the standard deduction, let's just say $12,000 for this year, and that could save you as much as, you know, $6,000, assuming you were in a very high federal and state income tax bracket, right? So I'm saying 12,000 times 50% if you're in a high federal tax bracket, or in a state like California where you're have a high state income tax. But again, I want to be conservative here with these numbers when I give them to you. And so let's say you paid them $10,000, and again, you're in a 25% tax bracket, either between federal and state or a blended approach. That's another $2,500 in taxes that you don't have to pay. And you know what? To take that step even further, now that the minor children have earned income, they can establish a Roth IRA and start investing for their retirement as young as, let's say, the age of 7 if you get them started early in your business, right? You may be asking, what are they doing in my business at 7 years old? Well, maybe in the beginning, they're just cleaning up the home office, helping you stuff envelopes, you know, but as they get older, they may be working on social media and other things, right? All right, the 5th one I have for you is sort of prepaying expenses, and even taking that a step further, maybe buying some electronics. We all know that electronics is quite expensive, you know. So if you've got invoices that you know that you're going to have to pay the next year, right? Pay them now instead of in 2022. If you're a cash basis taxpayer, which means you recognize expenses when the money leaves your account, then pay them now instead of waiting till next year. With the electronics, you know, you might want to buy for your business a new MacBook, right? Or camera or video equipment or a drone, you know, whatever's relevant for your business, an Apple Watch, what have you. You know, you can get that deduction now instead of buying that next year. If you want to buy it next year, great. But think about it. If you're in a high tax bracket this year and you don't anticipate being in such a high tax bracket next year, buy that stuff in this year, right? So if you bought $2,000 worth of stuff, again, you're in a 25% tax bracket. That's another $500 in savings. So if you're adding all of it up, all the tax strategies we talked about, we're up to $25,000 $25,000 in actual tax savings. I want to give you another reminder that this is not $25,000 in tax deductions, right? This is way more than that. This is $25,000 in actual taxes that you're not going to have to pay to Uncle Sam. All right, so maybe you're watching this and you're like, okay, great, Navi, but I'm watching this after December 31st. I can't go back in time. I don't have a time machine to go back in time and do those things. What can I do to plan better for next year? Okay, so a couple things. One is you can still contribute to an HSA, a health savings account, if you qualify for one. Look up the rules around that. But even if 1231 has passed, okay, you can establish a HSA by April 15th, when your personal tax return is typically due, okay? This doesn't qualify for, if you're filing an extension, you can't go all the way up until October 15th. You need to do this at April 15th or before, right? And so if you're single or if you have a family, you can contribute $7,000, if you have a family, that is, a little over $7,000 into a health savings account and get a federal and in some cases a state income tax deduction for that, right? So that's, you know, $7,000 times your marginal tax rate. Another thing that you can do after December 31st is contribute to a regular IRA if you're not a business owner. But if you're a business owner, you may be able to contribute to a SEP IRA. That's SEP IRA. This too can be established after December 31st. You actually have until you file your tax return, and that includes extensions. So rather than April 15th, if you're a sole proprietor, that could be October 15th, okay? Rather than that being March 15th, if you're an S corporation, that might be September 15th, all right? So you can do a SEP IRA even after December 31st. You have until the day you file your tax return, and that can be extended with extensions, all right? So with that said, that's what I've got for you, right? You've got over $25,000 in tax savings that you should be aware of by watching this video. So if you want more information, more free information that is, visit my website. It's navimirajcpa.com for a bunch of free resources that I have there, including where to form your LLC or S corporation for completely free, some spreadsheets for new business owners who want to keep track of their business income and expenses. I even have some extra tabs in there for you to take the home office deduction, auto deduction, cell phone, and internet. So you might want to go to my website and download that tool. And there's my entire video library there. So if you enjoyed this video, you learned something with this video, you can go in there and watch all my videos that are hosted on my website for completely free. All right, with that said, I'll see you in the next video.